Factory activity has declined again. Manufacturing production dropped by 1.5% in August. This marks the second consecutive month of contraction. The largest drags came from the basic iron and steel non-ferrous metals, metal products and machinery division. The food and beverages division also weighed. The JSE is set for a leadership change. Group CEO Leila Fourie will retire in March next year after 7 years at the helm. Under her tenure, the JSE modernized its systems, diversified revenue and strengthened its governance. She'll be succeeded by Valdene Reddy, the JSE's current Director of Capital Markets, pending regulatory approval. In the meantime, Euronext head of international listings, Gilles Ohana, says the JSE still has a lot of pull factor with international investors. Speaking to Business Day, Ohana commented that with initial public offering activity rising in Europe, the JSE is well positioned to benefit from secondary listings. That's as the local bourse is well known and is regarded as the backbone of the African capital markets. 2 decades of policy that failed to support exploration have caused South Africa to miss out on a generation of new mines. Now that's according to Anglo-American CEO Duncan Warnblad. The country's exploration expenditure has plunged from a peak of 6.2 billion rand in 2006 to just 781 million rand last year. The Minerals Council SA has highlighted this as a critical concern for policymakers, particularly as the global demand for critical minerals is rising, imposing opportunity costs on the local sector. Strong. That's how Equitas Property Fund has described its half-year performance. The logistics-focused REIT has delivered 3.8% growth in distribution per share to just over 69 cents and says it's on track to hit up to 143 cents for the full year. Growth was largely driven by higher like-for-like rentals in South Africa. The UK also contributed to a solid showing. Rental growth there was supported by positive rent reviews, where one climbed as much as 45%. The groups added that funding costs continued to ease as older debt was replaced with cheaper facilities, while asset sales were redeployed to boost returns. Looking ahead, Equitas says new developments for Shoprite and Spar are expected to lift earnings from next year. SALGA has flagged concerns over Eskom's proposed distribution agency agreement, saying it risks being seen as a backdoor takeover of municipal electricity functions. The association says electricity distribution is a municipal mandate under the Constitution, and any changes must comply with the Municipal Systems Act and local development plans. It's warned that the proposal could weaken municipal accountability, strain finances, and limit municipalities' ability to plan and drive development. SALGA President Bheki Stofile says empowering municipalities, not replacing them, is key to restoring financial stability and trust. He's called for transparent engagement between Eskom, government and communities. In international news, TSMC, the world's largest contract chip maker, reported a third-quarter revenue rise of 30%, beating the market forecast as demand for the company's products leapt on surging interest in AI applications. Here's more detail in this package report.
Artificial intelligence continues to boost earnings at chip makers. TSMC reported Thursday third-quarter revenue beat forecasts and rose 30% on the year. The world's largest contract chip maker saw demand for its products leap on surging interest in AI. Revenue for July to September came in at just over $32 billion. TSMC will report full third-quarter earnings on October 16th. The Taiwanese giant is also due to provide an updated outlook for the current quarter and full year. The company's customers include Nvidia and Apple. It's been a major winner from advances in AI. Demand has more than offset the fall-off of pandemic-led demand for chips used in consumer electronics like tablets. TSMC's Type A listed shares have risen more than a third so far this year.